Crypto prices have dropped even further below its resistance point of $30,000 USD and now even below $20,000. For those who have invested in crypto and thinking of potentially selling at a loss due to various reasons, make sure to watch this video to better understand what your tax implications may be. If you had invested for the long term and will be riding out the volatility, then this video may not be as applicable to you. That being said, if you're hoping to maybe get a tax break from incurring losses, let me show you how the tax system works. Hi, I'm Gabrielle, a CPA and tax expert. Today, I'll be covering the tax implications from crypto losses, walk you through a live example of how you might calculate your tax impact, and then bring it all together as to how you might make your decision to sell your crypto holdings. According to the CRA, there are two main classifications for your crypto holdings: capital property or business property. The tax treatment is also very different for the two. To get some terminology out of the way for capital property, when you sell crypto, you can have a capital gain or capital loss. A capital gain is when the value of your crypto increases and you sell for more than what you originally paid for. A capital loss, on the other hand, is when the value of crypto decreases and you sell for below what you originally sold for. When it comes to capital property, any dispositions such as sale of your crypto results in a tax event, which you would need to report on your tax return. If you had made capital gains, then only 50% of it is included in your income. On the other hand, if you made capital losses, you also only report 50% of the losses on your tax return. Another caveat to capital losses is that you can only offset other capital gains. So for example, if you had capital gains on other investments such as rental properties or stocks, you can offset it with capital losses from your crypto. You will not be able to offset it with any other income sources such as your business income or your employment income. So if you do not have capital gains to offset your capital losses, then you simply need to carry it forward to future tax years when it might be applicable to you. Now, if your crypto is considered business property, this will provide a totally different tax implication. If you have made profits from disposition of crypto, that would be included in your income at 100% instead of the 50% for capital gains. However, if you have losses from disposition of crypto, then those losses are also included at 100% and can be used to offset any other sources of income, such as your business income or employment income. Also keep in mind that dispositions result in a tax event. I say dispositions since it's not only sale of your crypto that creates a tax event, but any of the following, such as when you sell or you make a gift of crypto, you trade or exchange cryptocurrency, including disposing of one crypto to get another crypto, you convert crypto to government issued currency such as the Canadian dollars, or you buy crypto to buy goods or services. Let me illustrate the impact that this could make on your tax return. Let's say that you had around $10,000 in losses from disposing of your crypto, such that you initially bought for $25,000, but now it's only worth $15,000. You also have $70,000 in taxable income from your business or your employment income, and are in the 28.2% marginal tax rate, which is the combined federal and BC tax rate. If crypto was considered a capital property, then the $10,000 in capital losses cannot be used to offset your $70,000 in business or employment income. If you had no other capital gains in the year, that $10,000 simply gets carried forward to a future year when you could actually apply against a capital gain. At the end of the day, your taxable income is still $70,000 and your tax liability is around $16,400. However, if your crypto is considered business property, then resulting business losses can be used to offset your business or employment income. So your $70,000 in income is reduced by the $10,000 in losses, resulting in taxable income of $60,000. The tax liability is now around $13,400, which means you saved roughly $3,000 in taxes, or you may even get a refund for it if you overpaid your taxes during the year. Now, classification of your crypto holdings as capital or business property cannot be chosen at will. It depends on your intentions and the level of activity involved in the day-to-day management of the crypto. There is no black and white rule to determine what your intentions are, of course, and each situation is based on the facts of the circumstances. Since there are no specific crypto-related tax laws or court cases in place, we can refer to transactions in securities to provide general information to help you figure out about if transactions are income or capital gains. Some of the factors to determine if you're carrying on a business are frequency of transactions, period of ownership, knowledge of securities market, or in our case, the crypto market, security transactions or crypto transactions in our case that form a part of your ordinary business, time spent, financing, advertising, and in the case of shares or crypto in our case, their nature. So normally whether they're speculative in nature or of a non-dividend type or a non-interest type. Based on how the facts support each of the mentioned factors, there may be a case for your crypto being capital or business property. Make sure to go to a tax professional to properly determine your tax position. Let's take it one step further and say that you have considered crypto as business property. Further, two classifications under business property: inventory and a venture or concern in the nature of trade. I know, that last one is a mouthful. I won't be getting into too much detail since this can get quite complicated. But in a nutshell, if it's clear that you are in the business of crypto, such as you are in the business of trading or mining crypto, you can classify your crypto as inventory. This would mean at year end, you could value your inventory at the lower of cost or fair market value. This would mean that if the value of your crypto dropped at the end of the year, you could take a premature deduction against your business income without actually disposing of your crypto. However, if trading or mining crypto is not your main business, but you have some characteristics of a business, your crypto may be held in the venture or concern in the nature of trade. I would say this classification is sort of a middle ground between an investment, such as a capital property, and carrying on a business, such as a business property. An example that the CRA uses is that of a dentist who flips real estate on the side. While buying a real estate property for renting may be considered an investment, thus capital property, if you're actively renovating homes and trying to sell it for a profit in a few months, then the CRA may view this as a business. However, considering it's quite separate and different from your ordinary job, such as a dentist in our example, it fits in a different category called a venture or concern in the nature of trade. In this category, you cannot take a premature deduction like inventory if the value of your crypto falls at year end. However, any dispositions resulting in a loss can be used to offset your business or employment income. Let's bring it all together. Now, I know that was a lot of information thrown at you. If you watched up to this point, let me know in the comment section down below if you were able to follow along by writing, "I got it." Otherwise, comment "break it down" if you want me to make another video simplifying the concepts. Now, to bring it all together, if you have capital losses, you're not able to take a deduction against any of your business or employment income. So disposing of your crypto might not affect your tax position. Of course, if you need the liquidity, such as you need the cash or you don't believe in crypto anymore, then the tax implications might not matter that much to you. If you have business losses, you are able to offset it against other income sources, which may lower your tax liability, or you might even get a refund. This may be an area of tax planning. You can simply dispose of crypto for Canadian dollars, or you can exchange it for another crypto to trigger a disposition and get a tax deduction. Make sure to thumbs up this video if you found this video useful, and subscribe for more videos like this in the future. If you want to learn more about crypto taxes, feel free to check out my other videos here, and I'll see you in my next one. Bye!